Well, as promised, it's our Portfolio Advisor segment, and up for discussion today is Jose George's portfolio. Well, let's run you through his profile. He's 42 years, he's in the service sector and has a long-term horizon on the stocks in his portfolio. Starting off with an Ashok Leyland, he's got 2,000 shares, at a price of 23.4. There's also a Bharti Airtel, 321 is where he picked that up at, close to 300 shares. Bharat Forge also features on the list, 200 shares fetched at a price of 224. BHEL from Cap Goods makes an appearance, 224 is where he fetched those shares. Ken India, he's got 125 shares at 286. There's a little bit of defensive in the form of Cipla at 312. Coal India also 250 shares bought at an average of 313. Dabur 500 shares picked up at 126.9. Development Credit Bank, so it's 1500 shares of that one at a price of 44.9. Exide Industries, he's got that one at 126, close to 200 shares. Hexaware from IT2, that's picked up at a level of 91.9. And finally, Hindustan Copper, 375 shares fetched at a level of 139. Mr. Chokkalingam, what's your assessment of the overall portfolio?
Overall portfolio is quite diversified across various sectors and also between the large cap and mid cap. The only suggestion I can make about the portfolio is that just in two stocks, namely Bharti Airtel and BHEL, he has deployed almost 29% of his portfolio, which is not advisable. The retail investor should always restrict to maximum 10% of the portfolio. Only if they find the valuations are extremely attractive, they can go beyond 10% of the portfolio. Otherwise, for each stock, they should restrict to maximum 10%.
Okay, so that's a word coming in on the overall portfolio. So let's get the individual stocks as well analyzed in greater detail then. First up, of course, we've got an Ashok Leyland, 2,000 shares of that one, a Bharti Airtel at 321, as well as a Bharat Forge. And given the current market price, some of them are looking expensive, Mr. Chokkalingam. What would you advise?
I would suggest shifting from Ashok Leyland to Indraprastha Medical because considering the volatility in the stock market and also the pessimistic outlook for the commercial vehicle space, I would suggest sell on Ashok Leyland and move this money to Indraprastha Medical, which is a very defensive in nature in terms of its business model. It's into healthcare and the company has been growing consistently for the last 10 years and also it's providing around 5% dividend yield. So I consider that as a very safe avenue to put his money. Bharti Airtel is, I firmly believe that a long-term wealth creation story is over for the telecom companies. However, the stock has taken a lot of beating, so you should hold on to it. At around 300 level, it can come out of the stock. On BHEL, though a lot of market participants are very apprehensive about the stock, I still remain quite optimistic in the long term. It's a zero-debt company, and it has recently tied up with the Mitsubishi for technology. And beyond that, even post Lehman crisis, the stock almost lost 50%, but again, once again it doubled. I firmly believe that next 1 to 2 years, the stock still can give a very impressive return once the interest rate cycle reverses. As far as Bharat Forge is concerned,
okay, go ahead.
Yeah, sorry. Yeah. As far as Bharat Forge is concerned, I would suggest shifting from Bharat Forge to L&T because on 1 year forward earning, Bharat Forge is quoting at around 16 PE, whereas L&T is quoting less than 12. And L&T is heavily focused on the domestic business, which accounts for 80% of its business, whereas Bharat Forge gets almost 50% of the profits from the business in Europe and the US, where we see a lot of concern in the automobile space. So therefore, I would suggest selling Bharat Forge and using the proceeds to buy L&T.
What would you advise on a Bharti Airtel, Ken India as well as Cipla?
Bharti Airtel, I would suggest hold on to the stock and sell the stock at around 300. Certainly the long-term wealth creation story is over for Bharti Airtel because the subscriber base has saturated. Still, the stock has been beaten down a lot, so therefore you can hold on till 300. Ken India, you should hold on. It is very difficult to believe that Ken India with more than $200 billion of cash and with the potential to generate $1 billion of cash every year in the next 10 years is quoting at around 6 PE. And further, there is a tremendous positive outlook for the oil production in the country. So therefore, you should definitely hold on the stock. Cipla again in the volatile market, this could be a very defensive stock, because it's into pharma as well as the export is, right now it's growing quite fast for the company, and therefore you should hold on Cipla as well.
What about a Coal India, because that's been facing certain production issues, as well as a Dabur and a Development Credit Bank?
Coal India you should hold on. And the stock has already corrected almost about 20% in the last 1 or 2 months. And not just because of the correction. If you look at the balance sheet, it is extremely strong, sitting on more than 60,000 crore of cash. And also it's the lowest cost producer of coal in the world. And I am very sure that since there is a tremendous pressure on meeting the requirement of power industry for the fuel, the government will be forced ultimately to liberalize the environmental clearance for pending projects of Coal India. That will be a major trigger for the company. As far as Dabur India is concerned, I would suggest sell Dabur India and buy ITC. ITC has got this business size which is 5 times what Dabur India has. But however, both Dabur India and ITC are trading at around 12 times FY15 earnings. So considering the size, I would shift to ITC, and also ITC has got a peculiar advantage within the FMCG space. It has got the cigarettes business, which is a cash cow, which has been growing margin consistently over the last 10 years. And finally, ITC also will benefit from the expected turnaround of other FMCG business. Development Credit Bank, I would suggest sell the bank and buy South Indian Bank, because South Indian Bank has got a business size of around 75,000 crore, which is 5 times the business size of Development Credit Bank. Moreover, Development Credit Bank is focused in Mumbai city, but South Indian Bank is entire South India and also spreading outside southern India. And it's also one of the old private sector banks, which again belongs to the category of very efficient old private sector banks, because net NPA is only around 0.6%. And again, this bank doesn't have any promoter concept. So therefore, there is a possibility of this bank joining the consolidation process.
Okay, Mr. Chokkalingam, let's take it to the last set of stocks then. Exide Industries, he's got that at 126. Hexaware, which won some deals, as well as divestment candidate Hindustan Copper.
You should definitely hold on Exide. Stock has corrected, and more than that, it's a play on automobile population theme. Though the automobile sales are under pressure now, if you look at the automobile population, it has been consistently growing, which is very favorable to battery manufacturers like Exide India. And also they have now acquired almost 100% stake in the ING Vaishya Life Insurance business. In the long term, they can definitely unlock money from insurance business as well. So you should hold on. Hexaware, there are a lot of positive triggers in the stock. First of all, it is one of the cheapest IT stocks in the market. And second, it has got a dividend yield of more than 6%. Third, there is a potential for the company to join the consolidation process, because the promoter stake is only around 28%. And also it's a clean balance sheet and a lot of cash on book. So I would suggest holding on to the stock. As far as Hindustan Copper is concerned, I would suggest sell Hindustan Copper and buy Hindustan Zinc. Because if you look at the valuation, Hindustan Copper commands a PE of more than 25 as compared to just 7 for Hindustan Zinc. Whereas Hindustan Zinc is the most efficient metal player as compared to Hindustan Copper. If you look at the employee cost, just as an indicator, the employee cost for Hindustan Zinc is just 5% of the sales, whereas for Hindustan Copper it is around 22% of the sales revenue. So it's a really big anomaly as compared to the valuation of Hindustan Zinc. So it will get corrected, and I firmly believe that Hindustan Copper will fall much more from the current level. So therefore you should sell Hindustan Copper and buy Hindustan Zinc.
Okay, so Mr. George, it looks like that Mr. Chokkalingam's done an in-depth analysis of your portfolio. So let's just quickly revisit the changes he suggested. Ashok Leyland, he's advising you to exit that one. Instead, look at buying into an Indraprastha Medical for a target of 43 rupees. Hold on to Bharti Airtel. This one can probably go up to a level of 300 odd. For a Bharat Forge, that's an exit, and instead replace it with L&T, that Infragiant, for a longer-term target of 1745. BHEL as well is a hold for a longer-term target of 284 rupees. Care India as a hold, and you could be looking at a target anywhere closer to 398. Cipla as well, your defensive pick is a hold call, so you could look at a target of 435 rupees. Coal India also stay invested for a longer term target of 400 rupees. Dabur from the FMCG pack, in fact Mr. Chokkalingam advises that you switch over to an ITC instead for a target of 348. A development credit bank also can be replaced by a South Indian bank where you could probably be looking to make about 36 rupees. Exide Industries, that one's a whole call coming in, as well as a Hexaware for an upside of about 112 rupees. And from the metals pack, Hindustan Copper that you have, you can replace that one with a Hindustan Zinc for a longer term target of 159 rupees.
Okay, Jose, hope we got your entire portfolio assessed, but here's that quick disclaimer from our end. Do remember to everyone that's watching that this is only a model portfolio and you should please consult your financial advisor before taking any investment decisions.
Well, let's then get you some trading and investing ideas for the week ahead. Well, let's go across to Kunal. Up first. And Kunal, once again, we've gone through a very rough week, but what are the trades you'd recommend for the week ahead?
Just two trades, one on the long side and one on the sell side, and because of looking at the volatility, it's difficult to gauge where the market is going to head. But whichever way it's going to head, it's going to be a very volatile way in which it will head. The first trade is a sell on idea. On Friday, it cracked sharply, and my sense is it's just opened the fresh leg on the downside. I'm giving a target of 94, which is very close to the 200-day moving average simple, and a stop loss of 108. Is a very good risk-reward ratio for idea. The second is a buy call on McLeod Russell, and I think this stock on Friday managed to give a very decent bounce. The bounce is from the 200 DMA, and I think that there is some more potential for the stock in the next few days. So I think for the next couple of weeks, I think one can look at a target of 360 with a tight stop loss of 335.
Okay, that's the call coming in. A sell on idea, a buy recommendation on McLeod Russell. What about you, Mr. Chokkalingam? If you could quickly walk us through your picks.
Yeah, I would suggest two good value stocks. One is Hyderabad Industry. It's a leader in cement product business. The stock is available at 4 PE and with a dividend yield of 5%. In the last 5 years, the revenue has gone up by 2 times, but the profit has gone up by 4-fold. And also, it has got huge land bank in Hyderabad. And if they unlock the value, the stock can be a multi-bagger. The second idea is Surya Roshni. It's into steel pipes and branded lighting business. The branded lighting business is more than 1,000 crore now. There is a possibility of restructuring the lighting business. If that happens, it could be a multi-bagger. If it doesn't happen also, if the stock is available at just 4 PE with a 4% dividend yield, for the last 22 years, the company has been paying dividend consistently. So these two are the great value stocks, I believe, and every investor should consider accumulating these two stocks.
Okay, so two value buying ideas coming in from Mr. Chokkalingam, as well as two trading ideas for the week ahead from Kunal. So on that note, gentlemen, would like to thank both of you for joining us today on the show.
Okay, that brings us to an end of this edition of Buy Now Sell Now Weekend. Thanks so much for watching. We'll see you same time next week.